The next thing I want to talk about are the tax entities. Now, in this particular course, this is a one semester course, Basic Income Tax Accounting, and we're going to focus on this first entity, which is the individual. The vast majority, in fact, pretty much all the items that we're going to be working with are individual tax returns. But it's also worth mentioning that there are other tax entities, and these, of course, involve businesses. And if you know anything about the different types of businesses, you've probably covered this in Intro to Business or Accounting Principles or various other courses. But you do know that there are three types. You have the proprietorship, partnership, and the corporation. And in the first two, in the proprietorship and the partnership, in those two, there's no separation between the individual and the business. So a sole proprietor who owns the proprietorship, that individual is the same entity as the business. And the same goes for a partnership. All those individual partners who own that partnership, there's no separation. So you will see, even though this is an individual income tax accounting course, you will see some instances where we will have business expenses, business income, and that, of course, will be coming from proprietorships or partnerships. So it's not until you get to that last entity that you really have an issue, and that's with corporation. And as you know, a corporation is a separate legal entity. So that means there is a separation between the identity of the individual and the identity of the business. And that is why in a corporation you have that double taxation. You have the taxation of both the individual as well as the company itself. And of course, corporate taxes would be discussed and dealt with if you had a second semester or a Part 2 income tax accounting class. So it's worth mentioning that so that we understand the entities. But in this particular course, it will be individuals as well as either a proprietorship or a partnership. Also want to talk just very briefly about tax crimes. And of course, we talked earlier about the purpose of taxes and the fact that some people agree, some people disagree with it, but nevertheless it's a inevitable part of life to pay the taxes. But in the case of tax crimes, we have two different terms here, and one is tax avoidance and one is tax evasion. And the difference there is, of course, we all want to minimize the amount of taxes that we pay, and there are different ways to do that. And as long as we practice tax avoidance, that means we're practicing legal ways of reducing our taxes. In other words, we're looking at all the options, we're taking advantage of all the tax credits, we're taking advantage of all the opportunities to reduce as much as possible the amount of taxes that we have to pay. And there's nothing wrong with that. That's perfectly legal. That's tax avoidance. But when you get into this second area, the area of tax evasion, that's a different story. That's where you're getting into the area of exercising illegal means in order to save money on your taxes. And when you cross that line, that means you've actually broken the law. So that's actually a tax crime. I also want to talk very briefly about audits. And of course, everyone that prepares their individual tax return, of course, they hope that they're not audited, but it's always possible. And of course, it would be literally physically impossible for the IRS to audit every taxpayer because there are hundreds of millions of tax returns that are filed. And of course, the IRS only has a few thousand employees. So since it is impossible to audit everyone, they have to have a system. And what they have is a system called the ADS system, which stands for Audit Discriminant System. And this is a computer system where they can program certain variables and have it randomly select either an individual or a business for an audit. And of course, the audit simply means that they're going to go back and verify and determine whether or not the tax return was filled out properly. And of course, they want to look at documentation, they want to look at everything. And of course, there's no way of really knowing who is going to be selected for an audit. And of course, sometimes the audit could be a very, very minor inconvenience. Then again, it could be a major issue. So of course, it's something that nobody looks forward to. Nobody wants to be the one that gets picked. But if it happens, it's something that is something that you just have to deal with. But the idea is that people have speculated. What are some of the things that might increase my chances of being audited? What are some of the perhaps problem areas? And of course, some of them that are agreed upon would be a home office. Anybody that has a home office and tries to deduct the expenses of a home office, that gets into a difficult area, because is it truly something that is a business expense, or is it a personal expense? So that's an area that has been seen as an area that would commonly increase one's chances of being audited. If you are self-employed, that would increase the chances. If you take a large number of itemized deductions, that would raise a red flag. That would perhaps invite a little bit more scrutiny. And of course, large business losses. A large business loss could be a legitimate loss, but then again, it could be a situation where the person is trying to evade taxes. So these are just some areas that have been identified as problem areas, and certainly areas that would perhaps increase your chances of being audited. But it doesn't mean that you would necessarily have to have one of these in order to be selected, because there have been people who have a very, very straightforward, simple tax return that has a standard deduction and nothing complicated about it, and even they've been selected. So there's no way of really knowing, but certainly these would be some areas that might increase those chances. And then the last thing I want to talk about in this video, and remember, this is just a basic introduction video, so a lot of these things we're going to be going into more detail later on. But I want to talk very briefly about tax services. And when we think about the different services that an accountant would provide, some of them are obvious and some of them are not so obvious. So for example, tax preparation. That's going to be the bulk of what we focus on in this class. How to actually calculate the taxes, how to fill out the forms, how to determine if something qualifies or if something doesn't qualify, those types of issues. And then that, of course, leads into the actual tax filing. So those are the two big areas that we focus on and are the most obvious. But they're not the only services that an accountant would provide. An accountant could also provide tax advice and also tax planning. The idea is that decisions that we make in life about purchasing a home or starting a business or getting married this year as opposed to next year, all of these decisions that we make in life have tax implications. So you could go to an accountant, and an accountant could provide some advice and tell you maybe a better way of doing something that would benefit you in terms of taxes. And also tax planning, looking ahead to the future, looking at decisions that you might want to make in life and helping you decide the best time to do those things. So that's an area that perhaps is not as obvious. And of course, the idea is that obviously an accountant that deals with taxes, they're going to be busiest after the first of the year leading up to the April 15th deadline. That's going to be the real key busy time. But with tax advice and tax planning, they could also have clientele that they work with all year long, that they have businesses that might have a fiscal year that's different from a calendar year, or they might have people who have filed extensions, or they might have people who are literally coming in for advice or planning and looking ahead to the next year. So the idea is that it's just various services that we could provide, and they would be fulfilling a need and also fulfilling the need for the accountant to have services available all year.